Hey guys, it's Michael. There's been a lot of talk going around about interest rates going negative. Just imagine a world where every time you deposited money into a savings account, they charged you. You got less money back than you deposited. Or that every time you took a loan out, they paid you. That just doesn't make any sense. They're paying you to take out a loan? On paper, that's basically what negative interest rates would be. And they have never happened in the history of the United States yet. Other countries in Europe have started to experiment with negative interest rates like Denmark, Switzerland, Sweden, but never in the US. This is one reason why the US dollar is typically very strong compared to other countries' currencies. But right now, futures are predicting that interest rates will go negative in 2021. So today, we are going to go over exactly what negative interest rates would look like in real life, what they would mean to you, and if it will actually happen. Because on paper, negative interest rates are very different than what they would actually be. Also, a lot of people are saying that we will need to keep having more stimulus money and more stimulus packages pass, or we'll need to implement negative interest rates because opening up our economy will simply not do enough to help us recover. So all I ask from you is that you smash the like button, turn that gray like button into blue, and also please subscribe to my channel. Anyways, Donald Trump has been tweeting a lot about negative interest rates and how he thinks it's a good option. He said, as long as other countries are receiving the benefits of negative interest rates, the USA should also accept the gift and big numbers. So essentially, that's like saying everyone else is jumping off a third story of a building. You might as well jump off it. It might be fun. You might learn a new parkour move, but you're most likely gonna break a lot of bones and have severe injuries, and you might even die. But it could end up well. I mean, you might as well do it, right? No, but seriously, negative interest rates are an option that a lot of people are talking about right now. While futures are predicting negative interest rates, and Trump has suggested them, Jerome Powell, who is the chair of the Federal Reserve and the money printer man, he says that it's not going to happen. He said it's simply not an option that they are even considering. It's never going to happen. That's what he's been saying recently. Even with all of the push from Trump saying that we should do it, Jerome Powell says it's not going to happen. The US is not going to have negative interest rates. In practice, negative interest rates wouldn't be exactly as they are on paper. So do you really think that a bank would give you money, would pay you if you take out a loan? No, that's not going to happen. They're not going to pay you for taking out a loan. So the federal funds rate and the interest rate that we all hear about is the rate at which banks charge one another for short-term borrowing. It's used as a benchmark for a number of products that banks sell, like credit cards, for loans, for interest rates on savings account. It's not the rate that you and I and regular everyday consumers get when they get a mortgage or a loan. That's not the same rate. And this is why you would never get paid to take out a loan, because the banks use something called the prime rate. And what the prime rate is, it is the interest rate that banks use for their most creditworthy customers. It's typically 3 percentage points higher than the federal funds rate. So for example, if the interest rate is negative, and let's say it's 0.25%, it's negative 0.25, well then banks are going to charge you still 3 percentage points higher than that. So they'll charge you still 2.75%. So while on paper, it may sound like you're going to get paid to take out a loan if interest rates are negative, that the bank is going to pay you money. We all know that's not going to happen. So for everyday Americans, what's most likely going to happen if there's negative interest rates is that mortgage rates are going to be lower, credit card rates are going to be lower, but no one is going to pay you to take out a loan. On the other hand, negative interest rates are going to hurt people who save money, going to hurt the savers out there, because they will likely lose any benefit for stashing cash in a savings account and may even be charged a small percentage by the bank to keep their money in a savings account. Normally you get a small percentage return for keeping your money in a savings account, but now with negative interest rates, they may charge you, so you may be losing money for keeping money in a savings account. So the reason behind negative interest rates is to get people to start spending more money. Because think about it. If it doesn't make sense for you to keep it in a savings account because you're going to essentially be losing money, you're going to have to pay the bank to keep your money in a savings account, well then you might as well spend it on something else rather than try and save your money, because you're actually making money by spending it. So that is why some people are pushing for negative interest rates. They want people to start spending more money to give the economy almost like a jump start, to help it get going again. But however, the long-term consequences of negative interest rates could be really severe. We've seen it in other countries like Switzerland, Sweden, Denmark. It's been in a number of other countries. And some of the severe effects of a negative interest rate in the long term could be that they create new bubbles in the economy. For example, they may increase property prices, cause them to skyrocket because people are going to put more money into physical assets such as properties. And then this makes it even more difficult for the younger generations to get on the housing ladder, to start buying houses, and this creates a housing market bubble. In addition to this, people who save money typically don't have to endure these negative interest rates on their checking and savings account. Normally what happens is that banks will then have to absorb any of the losses from the negative interest rates on savings account, and they try and shrink their margins and take any offset by using the money they make from sending out loans and savings account. They're going to be struggling, and they're going to have to restructure how banks are run, and this is also not good. We've seen a lot of issues with Deutsche Bank in the past because of what has happened in other European countries with Deutsche Bank. And then lastly, when rates become negative on paper, you think, well, everyone's going to start spending their money because it's expensive to save it. By saving it, you're going to have to pay a small fee. But that's not really how it works, because people are not just going to start lavishly spending their money on buying a bunch of stuff when interest rates are negative. That's not how it works in real life. On paper, that may be how it works, but in real life, things are not that simple. So the big question is will negative interest rates actually happen? Will interest rates in the US go negative? And according to Goldman Sachs, a strategist from Goldman Sachs says another big setback in the US economy could prompt the Federal Reserve to consider cutting interest rates, maybe even make them go negative. But he said this type of monetary policy wouldn't be very helpful at all. A lot of people think if there's a second wave of coronavirus cases and more infections, that a stimulus package and more stimulus money is going to be a lot more helpful than cutting interest rates and making them go negative. And according to the Federal Reserve and multiple interviews with Jerome Powell, he says it's not going to happen. He's not going to be cutting the interest rates, making them go negative, and he really is encouraging that we get another stimulus package passed. He said it's going to be good for the economy for long term. It's going to help us recover quicker. So if the man in charge of printing the money is saying that he wants more stimulus money before he's going to make the interest rates go negative, I would think it's not very likely that interest rates will go negative, even though the futures indicate that interest rates may go negative in 2021. Anyways, that is what's going on in the world today with negative interest rates. I hope you guys enjoyed today's video. Don't forget to get your 2 free stocks valued up to $1,400 when you sign up for the Webull investing app. All you need to do is deposit $100 into your account, and you'll get 2 free stocks valued up to $1,400. Get 1 free stock when you sign up for Robinhood. Check out the links down below and join our Power of Finance Investors group. Thank you so much for watching. Please be sure to like the video down below, leave a comment, and subscribe, and I'll see you guys next time.